Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 23rd of January, 2020. One more Thursday left in the month of January before it is done. Amazing. Just feels like the year has just started. I want to remind everyone that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1677. This morning, the overall sentiment is risk off. We are opening in the S&P minis in a gap down. We have a small gap down going, currently trading 33.15. The bonds are up 20 ticks. The yen is up. The 10-year note is up. The Eurobond is up 25 ticks. The dollar's up, trading at 97.32 and a half. Crude is taking a bit of a beating here. Has moved down to 55.17 yesterday. It closed at 56.08 in what was an impulsive day, almost a three volatility sigma move, close to close move day, by an impulsive and rare day by all measures, really. So the expected continuation today into 55 in crude is exactly as expected. So the crude is the laggard, followed by the DAX, the Euro stocks, the Dow's off 66, the S&P down 4.75 points, and so on and so forth. So clearly, risk off the table this morning after new all-time highs yesterday. The market is pulling back. I'll make some comments on that. There was some evidence already yesterday. I may have mentioned it. I don't remember what I've mentioned where, but I'm seeing signs of capitulation by buyers in the S&P minis and in the indices. And the expectation is we're likely to rotate down. Next area to test is 3307 in the S&P, but we'll cover that in a minute. In terms of what's ahead for the calendar, this morning, a half hour ago, we got the initial jobless claims came in at 211,000 versus 212,000. Just basically in line. The Trump administration is pushing another tax cut, claiming that, excuse me, claiming that they want a tax cut for the middle class to stimulate the economy. I don't know how much macro you look at, but the last tax cut was cost the deficit about $1.4 trillion unfunded, and the Fed has already pumped about close to, I think, $270 billion since September into the stock market, essentially. And the last tax cut was supposed to stimulate hiring and stimulate the middle class, but I'm not sure if it did so. And by the fact that they're talking about this on an election year, it tells me that either either the last tax cut didn't do what it was supposed to do, or it's an election year, and so you need to pay people, or both. So anyway, the commentary here is not on the politics of it. The commentary here is that there is a lot of chatter on this, and so pay attention to that particular aspect. It seems to be moving into the middle of the news cycle. Let's have I don't see much on the calendar today in terms of releases. The Eurozone has consumer confidence flash coming out at 10 a.m. Eastern, a half hour after the open. And then the key figure for today is the inflation rate in Japan, which comes out at 6:30 p.m. Eastern time, expecting 0.5. Let's make a quick move to the review. Yesterday, the primary scenario, we were in a gap. Primary scenario is a pullback to the gap zone high for a bounce and a push. And I was looking for 33.40, which was the main liquidity area up above. I talked about liquidity in the depth market a fair amount yesterday. The secondary scenario is an attempt to push higher, failing and falling into the range and skidding on 25 or so. Um, the third scenario, which pretty much played out, is an open test higher push towards the 33.40 again high liquidity area, although I had 33.37.75 as a measured move high and a stock zone, and that's pretty much where we stopped. And then the expectation on scenario 3 is on making new highs. It would likely push back down towards the open with the ultimate target below being 24. Okay, so those are the scenarios. Let's compare it to what we got yesterday. So here we are, open, test, and then a small little push and a drive up, gets to 33, 35, 50, pulls back to the open on the dot, and then we ultimately get to 37. Again, that was a stock zone, a measured move high, and then from there we have an impulse down, which is expected to get a continuation, and the continuation actually gives us a neutral day. We broke the IB high. This is the IB high, the first hour's high. This is the IB low, which happens to be the opening swing low, and then we broke the IB low to give us an impulse continuation into the IB low on a neutral day, and then we ultimately ended up pulling back and retesting the mid. Just a beautiful trade here for another continuation. And the continuation, of course, targets 24, 25 right here tested. This was the big target in yesterday's range. Gets it right in here and then consolidates into the close. What we have yesterday is a neutral extreme down, We bounced twice off of Tuesday's closing price. This orange line's Tuesday's closing price. Neutral extreme down off of new all-time highs. Gives us a further indication of capitulation at the high. Notice that the delta didn't really move down with price, which is kind of odd because the delta has been relatively weak in terms of the opening price relative to the opening price. Yesterday, it didn't seem to get much selling participation on the way down, which I find odd. But in either case, price is showing neutral extreme. The profile, let's clean this up a bit. The profile just shows a very blocky and active price discovery triple distribution profile right here and right here, the key necklines. Those are the numbers that we need to pay attention to. The first neckline is right up here at 32. The second neckline at 26, and we finished at the low. So that's where that's what the price action shows. I'm sure those of you who are trend line kind of traders have put up a channel here and are looking for how that's going to break, but that's the bottom line for yesterday. And then let's walk that forward to what it did overnight. Overnight, we open and we immediately push down right here, immediately push down to complete the neutral extreme low. The neutral extreme low was interrupted by the close, and the reopen pushes us down, moves us into the 33.11, which is a pretty big area. 33.10, 33.11 is a stock zone area right there. And we go sideways. The overnight session, very boxy, very, very balanced with a pretty decent volume. I expect that this morning's action to be well participated. The overall inventory is short in price and in delta overnight. So that's where we stand in terms of the order flow. If we look at the overnight session, really it's been fairly quiet. We do have some liquidity above and below. Remember, 3307 is the next big area down, and we have some liquidity at 3305. And overall, it's been kind of sideways and not really testing anything. So it's looking like, with the volume that we've had overnight, 254,000 or so traded so far, we have a fair amount of activity, but the price action is saying that it is choppy, imbalanced, sideways. So with the full depth here, we can see that there isn't any heavy, um, offering or bidding in the market in terms of standing orders. So we'll see how the opening goes. We're not getting any clues off of CT Bookmap, and then we'll just move on to looking at today's expectations. So for today, let's take a look at that. For today, I'm looking at a gap down. Gap rules really. The gap size is such that there's a decent probability of a gap zone fill. The expectation is for an open auction that pushes this overnight low into 33.10, expecting it to wobble, expecting it to turn around. I'm looking for an impulse higher, and I'm looking for it to be responsive back into the prior day's close. More selling coming into the ES, pushing the lows again, as you can see. And then I'm looking for it to squeeze up into 24. Again, 24 is in play above. If we do get along, that would be the key target. Secondary scenario, responsive buying immediately, squeezes into this 33.18 area, 33.19, impulses down, consolidates at the open, and then continues down to 33.07 and 03 before we get a bounce. I am very conservative with my expectations on the short side, although one of these days it is likely to spill its guts and give us a 1 or 1.5% move in a day as the market corrects. So those are the two key scenarios. Above it's 24, below it's 07 and 03. Those are the key target areas. We're well within range to get those. Within range to get those, and that's that. Anyway, I'll leave you with that. Hopefully you've gained something today. Remember, mind your risk, pay attention to your risk, make sure you're sizing every bet in a way that allows you to come back in case you get a string of losses, and to continue to participate. Okay, don't pay too much attention to your P&L. Pay attention to what the market structure is that you're trading, and trading accordingly. Trade it accordingly. Good luck.